topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. And man, it's another great Monday to be here and starting a week off talking about tax solutions and starting a new business in the new year. Now, have you kept your resolutions? And I saw a thing on TV the other day that said most resolutions have already been broken by the 9th. Well, we're here to the 12th. So if you still are keeping your New Year's resolutions, then, hey, you're doing better than, I guess, most average Americans that make New Year's resolutions. Now, I haven't made any New Year's resolutions because I don't like breaking resolutions. But, hey, what I do commit to is helping people every day fight the IRS and put their tax problems to bed. Now, there is no better resolution than that. Whether it's a New Year's resolution, whether it's a resolution for the whole year, whether it's a lifetime resolution, that is what our goals are at Taxation Solutions, is to resolve your tax debt once and for all with the IRS. Now, whether you choose to use us at Taxation Solutions or you choose to use somebody else or you choose to go it alone, you need to be knowledgeable. You need to make sure the company's going to keep you informed if you choose to use a company. If you choose to go it alone, you need to make sure that you are on top of whatever the IRS is asking. Now, not to start your Mondays off on a bad note or to start your Mondays off with threats from the IRS or start your Mondays with, oh my God, what's the IRS going to do to me if I owe the IRS money? But this is the thing. If you're working with the IRS and do it yourself and you ignore them, you always have to remember they are the biggest, baddest, worst collection agency in the whole world. Means they can come take your money. They can levy your bank accounts, garnish your wages, levy, if you're a contractor, levy against those that are going to be paying you. And that levy isn't just partial levy, it is 100% levy up to the amount you owe. That being said, if you're dealing with the IRS, meet their deadlines. They give you deadlines for a reason. And it's more of a deadline on when they're going to make harsher collection activity. If you're getting letters from the IRS, read them. Now, we're not here to scare you, to say, hey, this is what you're going to get levied or you're going to have a wage garnishment. No, what we're trying to do is say, hey, look, if you're dealing with the IRS, stay in compliance with what they're asking you to do. That's it. Now, you can't meet the deadline, call them. They might give you more time. If you can't meet what they're asking, you're going to have to prove why. And then you got to realize what your options are. I mean, everybody has options. I mean, even the biggest collection agency in the United States here, the IRS, has options. You just got to choose and pick the options and then say why this option is right for you. Support it. Now, if you don't want to do that and you need help, you call a company like taxationsolutions.net to get them on your side that can put a solution in place for you that will help you and get the IRS off your back. Now, we don't make outbound phone calls at Taxation Solutions. You need to call us. You need to get off the pot, pick up the phone, and say, hey, Mr. Fowler, I need your help. And what's this going to cost me? And we're not going to quote you a fee to say, hey, it's going to be this much right away. No, what we've got to do is talk to you and figure out, what do you qualify for? What's your income? What's your outgo? What's left over? What's your ability to pay? What's the ability to pay per the IRS rules and regulations? But that takes making that free phone call, free consultation. It's 888-930-1016. Again, 888-930-1016. Now, you're going to go it alone, or maybe you're going to use some help. What are the options you have? And we've been through the options, but you need to be aware of it. And that's why we dedicated, most of this program to, hey, what are going to be your options to put in place to help solve your tax debt, or at least get a delay, or push this a little bit further down the road so you can find a way to pay. And then a little later on, we're going to talk about starting a new business. So if you're here to start a new business, hey, or maybe you know somebody that's going to start a new business, make sure you get them tuning in a little bit later this morning here in this show to talk, as we're talking about starting a new business, but putting solutions. The IRS offers a payment plan. You call them up, IRS says, hey, Joe, you owe $25,000. And therefore, your payment plan is going to be, $500 a month. They run it through their calculator and they come in and say that, and you go, ooh, I can't afford that. Where am I going to come up with $500 a month? Well, Mr. Taxpayer Joe, that's what it's going to take. Now, how much money you got in the bank? And Joe answers, hey, I got about, $2,500. Great, let's pay that down today. So you can get in and let's make that commitment to make that payment today, and it'll bring your payment down to $450 a month. Ooh, I can't afford that. Well, I'm sorry, Joe, that's what it is. So you need to pay that. Or you're going to have to fill out forms, 433A, 433B. And then maybe we can, bring it down. But we need a payment today. So let's get that, $2,000 or $2,500 paid in, today. You just need to go to irs.gov and do payments and get that in today. Okay, you really need it. Oh my God, I'll do it. Okay, and you hang up the phone, and you've got so many days to make that payment. And you go talk to your wife, and your wife goes, honey, this isn't going to work. We can't afford to do that. I've got mortgage to pay. I've got the car payment to pay, and there is nothing left. But I told him it was going to be $2,500. I had $2,500 in the bank. We got to pay that. You don't make the payment. You didn't get time. You had to pay it by Friday. Now all of a sudden, because the IRS has already sent you notices and threatened to levy your bank account and all this, next week or two, IRS doesn't see the payment there. They sent you another nasty letter. You ignored it. Now they levy your bank account. Well, wife's not happy. Joe's not happy. Only person happy is IRS. Oh, bank's not happy either, because they just took all your money out of your account. You have to give it to the IRS in 30 days. And they also have their $249 fee that you have not paid yet because there was no money in your account. So once you put money in your account, they get their $249 fee for the levy. You're still out money. You're still having an unhappy wife. That wasn't what works. Now, what you should have done is ask them, said, no, I can't afford to make that payment right now. I need 30 days so that I can prepare the paperwork for you to prove that we can't afford to make these kind of payments to get a lower payment plan. And that's where you would have put together the 433. So that's where you're at today. Now you're needing help and you're needing assistance. And now you got to figure out how we're going to pay for that assistance within what you've got available. So, that's kind of what happens when you're dealing with the IRS. Now, that sounds really bad, but this is what happens when sometimes you're doing it yourself and you didn't get professional help and you didn't know, hey, I should ask for that 30-day hold. So get the hold in place, get the paperwork together. Don't commit to what you have in the bank. You don't have to tell them what you have in the bank, full amount. You can tell them, hey, look, maybe I got a couple $100 available. Maybe you can make that payment, and it stalls it a little bit. But there are other things that you can do. So what else can I do? Hey, I get you. Guess what? We're going to take a quick break. And then when we come back, we're going to talk about what else you could have done when you were on the phone with the IRS to start solving your tax problem. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. These segments go really fast. But this was kind of funny. I got a text message in from a lady that said her name was Lacey and her husband is Joe. Okay. I just thought it was funny because I think she was just picking up from what we were talking about. But anyway, Lacey, hopefully if your husband's Joe, he didn't get you into this situation. But they said they actually owe $50,000 and the IRS wanted even more money than what we were talking about. And they can't afford to do it. What are their next steps? Well, again, make sure you got a hold put in place. You can ask for that 30-day hold. And then you got to fill out the forms 433. And that's a financial form. It lays out everything that you have, including employment. How long you've been employed, what kind of employment do you have? As long as you're W-2, that's the only form you would really need to give to the IRS. And it's going to lay out where your bank accounts are. It's going to lay out how much is in your bank accounts. It's going to lay out any retirement accounts that you have, vehicles, property that you may own. And then it's also going to lay out all the expenses that you have. So your mortgage, utilities, housing, your food, clothing, medical, you name it, all the expenses of the household. And it has a section for other expenses that may not be included anywhere else. They will take all that information and work with you to basically prepare a financial statement that says, hey, this is what you can afford to pay. Now, when the IRS does that with you, they're going to go over this over the phone with you, and they're going to gather this information. So it's best to have that form already filled out and ready so that you're not just speaking off the top of your head. You actually have numbers and figures there. And then realize that if you're making charitable contributions, those are not deductible for the IRS. Realize that if you're paying for a kid's college education, they don't count that as expenses for you. Yeah, I know, kind of a weird world, because you have to fill out FAFSA for your college education for your kids, and you have to have a family contribution based on the income that you have and expenses you have. But yet for the IRS and these purposes, they don't allow families to contribute to their kids' college education when you owe the IRS. Who made up these rules? Well, Congress did. I don't know who made up the FAFSA rules. Who knows? But it is what it is, and you've got to do that. And then it comes down and says, this is what you can afford to pay. If it is a lower amount than the IRS has, based on their requirements, the guy or gal working at the IRS will submit for you a lower payment plan to their manager. Now, if you got any of this information wrong, hey, you may not be able to qualify for that. If the IRS says, hey, no, you can't have this much or that much of this or that, then the IRS can still say you have to full pay based on the installment agreement that is there. So keep that in mind. You still don't like what you have. Maybe you want to go after a HELOC loan or a second mortgage, or maybe you want to refinance your house to be able to pay off your debt. You can ask for a short-term payment plan, which is 180 days. And that gives you 180 days to pay off the full balance. Now they're going to subtract out any 30-day holds you have out of that. So you may only get 150 days, somewhere in there. Now there's no stopping interest and penalties. Those will continue to accrue, so the amount will still continue to go up over that 180 days. So if you could pay it off quicker, do pay it off quicker. But just remember, if you're going after a long-term payment plan, it's up to 72 months. They're going to look at the statute of limitations and adjust. Because the statute of limitations is only a couple of years, they're only going to give you a couple of years. And if that's the case, and your 433 shows that you can pay less, you could possibly get a partial pay installment agreement where you pay less and the debt falls off in a period of time. Now, if you're going to be in that kind of situation, I always tell you, get help fast. Because we can delay a little bit, get you into that partial pay installment agreement, and then you get to watch the debt fall off at a much cheaper and easier rate. Now, maybe you can't afford to pay anything, and you have no hopes of job prospects changing, or maybe you're retired and you're on Social Security, limited income, nothing else. Maybe you can get in non-collectible status. Non-collectible status is really good, but it's a temporary thing. If the IRS sees your income go up, they can then ask you to resubmit the financial statements again, the 433, and then decide again if you should stay in the non-collectible status or not. So it's just currently non-collectible. Generally, what we do is we see that stay that way for about 2 years, and then the IRS could come back up, ask for support. Unless you're on very limited income, then the IRS would look at your records and go, it doesn't matter. We're not going to bother with them. But if your income goes up, they could then come back and go through it. Now, the catch with all this is your debt's not forgiven until the statute of limitations run out. Interest and penalties will continue to grow. And then, of course, the IRS periodically reviews your financial status to see if they can resume collections. Now, if you're in this non-collectible status. They're not going to garnish your wages. They're not going to levy your bank account while you're in this status, unless you ignore them when they ask for updated information to decide you're going to be there. Now, the beautiful part is if statute of limitations are running out during this period, the statute of limitations continue to run, and they will run off, and that debt will fall off. Now, how long is the statute of limitations? It's 10 years for the date your return is filed and accepted. Now, there are a lot of things that can extend the statute of limitations. So it may be a little bit more than 10 years. Things like filing an offer in compromise will extend your statute of limitations. Doing a CDP, collection due process hearing, would extend your statute of limitations. Things like that do extend them. But you can ask the IRS when your statute of limitations run out on the oldest years, and they would generally tell you. Our tax analysis that we do at taxationsolutions.net does the same thing. It goes through and tells you, hey, when does the statute of limitations run out? We go through and look at all your tax debt. We look at the reasons for the tax debt. Is there something we could have done better or change and reduce that tax debt? Which reduces tax debt if we're able to go back in, let's say refile a return or do an amended return to fix your tax return that wasn't filed right, or fix a substitute for a return. It reduces interest, it reduces penalties and everything else if you're able to reduce that debt. So that's really a good thing to do sometimes as well. Now, real quick, before we get into the next segment, we're going to be talking about starting a business. The last thing that's out there that you can file for, and everybody hears this and everybody goes, oh my God, this is the dream of what we need to be doing, offering compromise. It allows you to settle your tax debt for less than the full amount you owe. Not everybody qualifies. You have to be eligible. The IRS does an in-depth review of your ability to pay, income, expenses, asset, equity. All this is going through the review. Don't think you're hiding anything from the IRS, because when they go through this review, it is extensive. If you think you're hiding property, you think you're hiding bank accounts, the IRS will find that information. You think you're hiding IRAs or 401ks or any kind of other financial account, the IRS will find it. It all needs to be 100% disclosed. Now, the IRS does collect a non-refundable application fee of like $205, and then will request also 20% of whatever settlement you're offering to give them. You can go to the IRS website, use the offer and compromise pre-qualified tool. It'll kind of give you a guidance of whether you would qualify for an offer and compromise. But just because you use the tool, depending on what the reasons are that you don't qualify, we may be able to work around that. Be able to find ways to modify things in your life to get you to qualify for the offer and compromise. So you need to be aware of it and make sure that you're doing the things that you need to do when you're filing for an offer and compromise. Now, when you're offer and compromise or filed for an offer and compromise, you got to remain compliant from the day you file it, which means if you owe estimated tax payments, they need to be paid up for the year. And then you need to make sure you're making them every quarter thereafter. Whew, a lot of information in 2 segments. You know, there's a lot of things you can do to solve tax debt. The first one is call Taxation Solutions at 888-930-1016. Again, 888-930-1016. Hey, we're going to take a quick break, and when we come back, we're going to talk about what we promised. Starting a new business in the new year. And we're going to do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Lacey texted back here and said, yes, my husband is Joe, and yes, we owe tax debt. Is there a way we can qualify for offer and compromise? Well, Lacey, the first thing to do is remember to call Taxation Solutions. You can go to taxationsolutions.net and check us out. Taxation Solutions A+ rated with the BBB. And our phone number for the free consultation is 888-930-1016. Again, 888-930-1016. And we're going to move on to starting a business. So starting a business in the new year involves, you guessed it, planning. Registering with your state if you choose to be a corporation or LLC. Or registering with your county if you're going as a sole proprietorship, getting your federal state employer identification number, opening bank accounts, securing necessary license permits, and getting business insurance. Whew, a lot of steps there. Let's back up and let's talk about plan and design and, planning. Develop a business plan. What kind of business are you going to go into? Outline your idea, your market, your financials. What are you projecting? That's where you should start every business planning decision, is developing that business plan. Now, you may not be going after loans. You may be funding it yourself. You may not be going after investments or anything like that. But you want to make sure you've outlined what you're planning to do. What is your idea? What is your market? Who are you marketing to? And then, what are you expecting? What's your financial goals with this? Revenue, expenses. How are you going to cover those expenses? Maybe you're rich and you got all the money in the world and you don't care. Okay, you still need to figure out how you're going to cover your expenses. You don't want to be operating off of what's in your bank account from your personal line just to pay employees and do nothing and lose money. You want to make it a winning business decision. You want to make money. That's what people go into business for, is to make money. See, when somebody tells me I'm just going into this for the write-off, means they have no idea what they're doing in business. It means they have no idea what's going on. If you're going just to lose money to save money on taxes, I don't care whether you're in a 36% tax bracket or a 20% tax bracket. The government is not going to sit there and save you. And remember, if you lose $100,000 and you happen to be in, we'll say 36% tax bracket, only saved you $36,000, you still lost that $100,000, even if it offset other income. So you're still a loser. You didn't win. So goal should be is to make as much money as possible. Have net income. Have a profitable business. So plan. And then choose a business name. You check your availability with your Secretary of State. Go to the U.S. Patent and Trademark Office. Look and see that the name is available to you in case you wanted to trademark it or patent it. If you got a brilliant idea, something you're coming out with, You're not going to come in and use somebody else's name somebody else is using and you can't get a patent or a trademark on. So if you need to get a trademark on your name and you can't do it, well, the business is only good locally, not nationwide. Then select your business structure. How do I want it to be structured? Do I want a sole proprietorship? Do I want a partnership? Do I want an LLC, limited liability company? Or do I want a corporation? So you've got to choose your structure with the Secretary of State's office at your local state level. And then you're going to start looking for location. Hey, people talk about, things being success in business, and it comes down sometimes to location, location, location. Well, they're absolutely right. It could come down to having access to your type of customers at that location. You don't want to be in a high dollar business selling something that has a very high cost in a low income area. You want to be in a high income area. So, you got to think about those things for location. So you could be selling farming products, ranching products, but you don't want to be in downtown Houston or downtown Chicago selling those ranching products when people aren't going to use them. You might be more rural, more towards the country. So you got to look at the types of products that you're selling for the location you're going to be at. You don't see a Tractor Supply in a big city. You see them out more rural because of the type of people they are catering to. Zoning. If you have zoning in your area, is your property that you're looking at leasing or buying, does it have zoning requirements that you cannot work with? Look at those things. See that it makes sense. And then you look at your lease agreements and read them. Do they make sense for you? Is it still going to help you be profitable? Your business plan came into effect and now you've got a lease agreement. Now the lease is way higher than you expected. It's going to be harder to make money. But it's in a better area, so that may be what you need to do. Trade-offs. Start going back, modifying your plan. What do you got to do? What's your product cost going to be? What is your market value? How is it marketable? What are your competitors doing out there? So you've gone through all that. Now you're ready to move forward and you're going to register with the Secretary of State. Get your name, file your documents for your LLC, for your corporation, for your partnership, appoint your registered agent. It might be yourself. It might be a company out there. Then you get your company name and everything else, and you go and apply for your employer identification number with the IRS. You need that number for taxes, for hiring. That is your employer's taxpayer number, your employer identification number. Then you may have to register with your Department of Revenue or Comptroller's office for a sales tax permit if you're required to collect sales tax for your goods or your services. So those are the steps. You're registering, formalizing, getting everything set. Now let's talk about your finances for your operations. So you got your employer identification number. You now can open a bank account. You're official. You can take that EIN letter and go down to your local bank and open up the account that you need. Now, this is a business account. You should be setting this up strictly for business. You have to maintain separation between business and personal. Now, if you're a sole proprietorship, maybe you went down and instead of registering For a LLC or corporation, you decided to do a DBA and you registered at your local county. You can also get an employer identification number for that, so you're not using your social security number on everything. And you can open up a business account as well at your local bank. I still tell you and recommend you keep business and personal finances completely separate. Do not combine, do not commingle. Keep those things separate. Makes it easier for you when you start doing the bookkeeping and accounting on your company to know what your finances are, to know where you're at. You're not commingling anything else. If you're going to secure funding, you can now start exploring your financing options out there. You can secure your funding. These are the things that you need to be doing. I know it's complicated and I know it's hard, but these are some of the little steps that you got to make. So we're going to talk about licenses, employees, and some other key considerations for your business right after this short break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking about starting a business. All the fun things that go into setting up a new business and the complications behind it. Don't get overwhelmed. A lot of these steps seem like, oh my gosh, it's just a burden. Why do I want to go through all this and do all this? Because sometimes the benefits of operating and owning your own business, if you are a driven person, it becomes sometimes the enjoyment of it. You can get a lot of enjoyment out of being not just your own boss, but helping other people from growing your business and hiring people, hiring the right employees, become almost like family to you. And that's, what we do here at Taxation Solutions and Trucker Tax Tools is our employees are like family. And sometimes those employees grow up and have to move on. Maybe they're going to start their own business. Maybe they're going to move to a larger company, or maybe they're having kids and staying home. All those things happen, and your business has to grow and evolve. And those people still remain family with you. But as a new business owner and you're getting set up, you got to check about license and permits. It varies by the type of business and the kind of business you're in. Go check your state requirements for your industry that you're going to be in. See if there is a license or a permit that is required. Then check your local requirements: city, county, health, zoning, occupational permits. So like maybe you got a building permit and you're moving into a new lease and you got to have the fire marshal's approval that your space is occupiable. Don't get yourself shut down because you're not allowed to occupy the building that you're going in, or you're not following the county's health or zoning requirements. So make sure you're checking all your local requirements along with your state requirements as well. Now you're getting ready, almost to the point of opening, and you need employees. So you might have to register as an employer with your state or your federal agencies. You need to understand all your tax responsibilities, such as federal tax withholding from your employees, such as state unemployment taxes, federal unemployment taxes, Social Security, Medicare taxes that both the company has to pay and what you withhold from your employee's check. That becomes a great responsibility. I tell you, don't shortchange this. Make sure you're hiring a company that does payroll and offers payroll services to help you so that you're not messing things up. Payroll taxes can be a death nail to a new business. It can also be a death nail to an existing and older business. So you want to make sure you're dotting your I's and crossing your T's and not having problems or issues with payroll taxes. I've seen it cost people their business. I've seen it cost people a lot of money because of the penalties and everything that get charged against you because of payroll taxes. Now, some states have a general state license tax. You may have to check with your state's revenue department or comptroller's department to determine what state license taxes you would have to pay. And some states charge a state income tax for the business. So you need to be aware of the taxes that you could face on that side. And then states like Texas will charge a franchise tax on your LLC or corporation, but that also comes with a minimum revenue that you've got to have, and that minimum revenue has to exceed closer to 2.5, 2.6 million this year. If you're not exceeding that kind of revenue, there is no franchise tax in the state of Texas. If you happen to be working in a state like California, it imposes a $800 minimum annual franchise tax on all corporations and LLCs doing business in the state, regardless of what your income is. Delaware requires all corporations incorporated there to pay a franchise tax, even if they conduct no business activities in the state. And that amount varies on the number of authorized shares or assumed par value of capital. New York, another wonderful state, imposes a franchise tax on general business corporations with rates based on allocated net income or a minimum tax on New York receipts. So, where's the best place to be? Hey, Texas, why not? These are the things that you've got to kind of take into consideration as you're going through this and you're looking to set up a new business. I come back to, hey, planning. Plan for success. Not planning for failure, you're planning for success. When you don't plan, that is an automatic plan for failure. You don't know what success is other than how much money do I have in my pocket today. So if it's about the money in your pocket today, then today you might be successful and tomorrow you might be a failure. Because you may need more money that's out there. Just remember, each step you take in business needs to be a step towards success. So when you're hiring, remember there's a cost to hiring. It's not just the employee's salary or payroll that you're going to be paying if they're hourly. It's going to be the taxes that the company pays that match for Social Security and Medicare. It's going to be the costs of the service to maintain payroll. So each employee has a cost to that employee for the company. Payroll, plus the matching taxes, plus the service costs, plus any other benefits that you're providing as well to them. all goes into the cost. Now, until that employee is doing enough service and work within the company that it generates enough money, that cost of that employee comes out of whose pocket? The employer's, the owner's pocket. So we always look at, like, if we're hiring around here at Trucker Tax Tools and we're going to bring in a new bookkeeper, let's say, and that new bookkeeper is going to get paid, $40,000 a year plus the benefit side of it. So let's say it becomes $45,000 a year. Well, they've got to bring in enough business to cover that 45,000 or more, or it comes out of our pocket as the business owner until such time that there is enough business to support that new person being on there. Because even though we may be overworking, let's say, the two people that are in bookkeeping at the moment, and we bring in the third, well, the third is just pulling work away from the other two that they're doing. And now we need more revenues to support this extra person that's on board. Same with when we bring in tax preparer. We've got to bring in more revenue and more clients to support their work here in the business. Otherwise, it's just purely outgo of funds at the cost of the employer and the business. So hiring a new person doesn't automatically generate more revenue. You need to be bringing in more clients and more work so that they can be paying for themselves. So we always consider each employee that we hire is at a net loss until such time as they are supported by additional clientele coming in. So that end, hey, we're looking for new bookkeeper clients. If you're a trucker out there or getting started setting up a trucking company and you are an owner operator, hey, call Trucker Tax Tools, 877-996-2477. Again, 877-996-2477. There is no better time to bring your bookkeeping and tax work to Trucker Tax Tools than right now at the beginning of the year. If you are a member of Owner Operator Independent Drivers Association, OOIDA, hey, our fees start as low as $25 a week, and for great bookkeeping for you. And then, we have other packages that include both bookkeeping and taxes. And if you're with OOIDA, we also waive setup fees or give you 50% off the setup fees. And there's not going to be much catch-up work, so we're not going to charge you for anything to catch up for this year. If we need to do last year's work, man, we can offer you a great deal on that as well. So, but just give us a call and check us out at truckertaxtools.com. We're here to offer you the services that you need to help your business and help your business grow. Again, it's truckertaxtools.com, and you'll be able to check out all the rates and everything that we do. We've been doing this for many years, helping truckers get their tax returns filed, get their bookkeeping up to date and everything else. Now, as a new business owner, bookkeeping and taxes are extremely important. Having somebody on your side to help you, guide you through the business and strategies of a business is important. And so knowing where your business is going is what bookkeeping does. Bookkeeping helps you through that and knows where you're at, so you know what you're going to end up paying in taxes, so you know what your net income is. So get a good bookkeeping services. And again, you can call us at 888-930-1016, and we can try to help you out. Whew, a lot of information, short time. Man, we're coming up at the end of another great program at Tax Talk for You. Make sure whatever you do, you go to taxtalk4u.com, tax talk, the number 4, letter U.com. Follow us over there. Follow us on Facebook. You can follow us through Taxation Solutions Tax Relief Facebook page, or you can follow us at Trucker Tax Tools Facebook page. Never miss an episode. We're here talking taxes every Monday at 10 a.m. Eastern Time on W4CYradio.com. You find us online, find our podcast on iHeart and all those all across the country and all the different podcast sites. So don't miss an episode. Be here 10 a.m. Eastern Time at TaxTalk4U.com. Hey, as always, have a God-blessed and glorious week, and we will see you next week right here on Tax Talk 4U. Have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalk4U.com. See you next week at W4CY.com.